In this video, I'm going to explain how double tops and double bottoms work and how we can use them to try and profit from short and medium term trades. Hello, I'm David Jones and welcome back to the next step of our charting and trading course with Trading 212. Now, in recent weeks, we've looked at more mathematical oscillator-based forms of market analysis. We looked at the slow stochastic and the RSI. I thought this week, to break things up, we'll go back to a chart-based approach to markets. And specifically, let's start looking at patterns. I think the simplest ones to cover, and what we're going to cover this week, is the idea of double tops and double bottoms. They're just variations on the whole support and resistance approach. They're really simple patterns to spot. So let's get into it straight away. Let's start off by first of all looking at the theory, the textbook approach to these sort of patterns. So here's our theoretical market. So the market's been trending higher, everything looks okay, and then the market does maybe something like this. So it doesn't break those old previous highs. So this is maybe the suggestion that we've got a double top starting, but the big level to watch is that old support, so that previous low. So it's what happens here that dictates do we have the double top. So if the market moves down and breaks, then that is the sign that we have a double top. The market's pushed to a high, has slid, which of course is pretty normal in an uptrend, pushes higher again, but doesn't take out that previous high, then actually breaks that previous low. So this is maybe a sign that sentiment is changing in the market. So from a textbook point of view, the signal to sell would be here. And what people who use double tops do as well, they'll look at how high that pattern was. Let's say that was 50 points high, and they'll expect the market to move at least 50 points following the break. So there's our textbook example of a double top. Not surprisingly, double bottom is the mirror image of this, but let's take a quick look. So we've got the same thing happening, just in reverse. So the market's been sliding, lower highs, lower lows, so it's a weak market, hits a level, rallies, but pushes down again. We're expecting it to break through those lows, as it has been doing all the way down, but something changes. We see buying come back in. This does become previous support. So again, the level to watch is that old high. What happens here? If the market rallies and breaks, then that's our double bottom. And once again, if that is, let's say, 30 points, then people who are trading off these sort of patterns will look for the market to move 30 points, at least from the point of the breakout. So that's the theory of how double tops and double bottoms work. Okay, that's the theory. As I always say, in the real world, it's never quite as clear cut, usually, as the theory would have us believe. So let's take a look at a couple of real markets, double bottom and a double top, and how we could have traded them. I thought we'd take a look at some individual shares for a change when it comes to examples. So what we've got here, this is the UK FTSE 100 company, BHP Billiton, so the mining company. So you can see from the beginning of 2017, the price was in decline. So it slid from £15 a share as low as £11 a share by June. But then it starts to get interesting down here back in June. So we had all the way through the year, we had seen it slip to fresh lows. But here, maybe we're seeing the signs of things changing. Maybe we're seeing, potentially, a double bottom. Let's just pick up on those levels. So I've highlighted the lows down here, around about £11. Then we have the highs here. This is what needs to be broken to complete the double bottom. So the highs are about £12.25. So we've got a pattern that's 125 high. If it breaks, we'll be looking for a similar size move, maybe out to 13.50. Let's just jump forward in time and see what happens next. So here's the break. It starts happening beginning of July. This previous level, 12.25, that had been a problem, we're seeing the market push through it. That is the completion of our double bottom. So let's just see how things ended up. So the target would have been hit. This one worked out pretty well. The market did hardly look back really following the break, pushed up and through that 13.50 target. So this is pretty much a textbook example. They don't all work out like this, obviously, but this, I think, is a good example of how this setup did end up in pretty much a big trend reversal. So this time, this is a US share. This is AT&T, the telecoms business. So it was the end of 2016. We've seen the price sharp rally from about $36 a share up to 43. So what's that? Nearly a 20% move in the space of little over a month. So we might think, well, actually, maybe this move's gone too far. We've seen the market sell off, rally, is this the start of a double top? Let's pick up on the levels. So the lows are in at about $40 a share, the highs are in at 43. Let's jump forwards, see what happens next. So the break of 40 will be the signal to sell, looking for a move back down to at least 37 if we're looking for a $3 move on the break here. Let's jump forwards in time. Interestingly, that level has held. The market slipped lower, but the buyers came back in ahead of 40. So far, the potential for the double top is still on, but it's not yet confirmed. If we break through $43 a share, we can forget about a double top. The market looks like it's moving higher. Let's fast forward in time again. So it ends up taking a while, but eventually we get the break. You know, this top started forming in December, and it wasn't until April 2017 when we had the market finally slip below that old support. So that would have been our signal to sell. Maybe stop losses above here somewhere, but looking for a move. If that's $3 high, we're looking for a move down to about $37 a share. So for the sake of completeness, let's take the chart out and see what happened. So once again, it did take a while, but it got there eventually. So during May, it traded down to about 37.40, rallied a bit, and then pushed, eventually trading as low as 35. So that's a longer term. It's arguably a triple top, 1, 2, 3 highs, but the approach behind the pattern is the same. You have this band of support and resistance, and the break signals the pattern has completed. So that was a couple of good examples. We were looking at longer term charts. Of course, you see these patterns forming over all sorts of time frames. I think one of the problems of trying to trade a pattern like this is where does your stop loss go? You know, in the examples we looked at, they worked pretty well. We saw the pattern break, and then the market went the way that it's meant to go. But I think one of the frustrating things might be if you're buying into a breakout of a double bottom and you set your stop loss a bit too tight, the market backs into it, stops you out, and then goes in the direction you thought it was going to go all along. So I think that's one of the drawbacks, is knowing where to place stop losses. But maybe, you know, if you experiment with them, if you like the idea of these patterns, you can maybe try different approaches to using stop loss and find out if this is an approach that actually might work for you. We're going to wrap things up there for this week for patterns. There'll be more to come, of course, in the weeks ahead. But if you have any questions or comments, just leave us a message in those comments down below. We do read all of them. If you like the video, click on the thumbs up. And as usual, if you've never seen these videos before, we do a whole load of stuff during the week. Cryptocurrencies, foreign exchange, jargon busting, all this stuff. So if you're not subscribed, if you click on that button there, you'll get automatically subscribed to the channel. And if you make sure the alarm bell thing down there is clicked, you'll get notified every time we upload a new video. But for this week, from me, David Jones, and Trading 212, we'll leave it there, and I hope you have a good trading week.